Welcome to the What's Your Deal podcast, where we discuss business acquisitions, investments, management, and exit strategies. I'm your host, Matt Uhler. Let's dive in. Welcome back to another episode of What's Your Deal. Today I'm joined with two very special guests. I'll introduce them and hang on, we're going to have a blast with this one. So Steve Johnston is an SBA commercial lending specialist with Midwest Regional Bank. He works with entrepreneurs and small business owners to secure financing for acquisitions, expansion, and growth. He's based in Arizona, and Steve focuses on helping business buyers navigate SBA lending, which is one of the most common ways that entrepreneurs finance business purchases. With decades of experience in commercial banking and small business finance, he works closely with others, investors, and operators to structure deals that turn business opportunities into fundable realities. Steve and I have also worked together on many deals over the past 15 years together. So Steve, welcome to the show.
Thank you.
Yes.
Nice to be here.
Our second guest is a frequent flyer here, as you know. We were just joking about whether this is fifth or sixth time she's been on. But backed by popular demand is Lindsay Denton. Lindsay's spent the last 7 years guiding business buyers through the financing process and now serves as a partner with Matt and Amped Funding Advisors, helping entrepreneurs nationwide secure capital for business acquisitions. Lindsay, welcome to the show.
Thank you.
So part of what makes this so much fun for me is that over the years, quite a few, Steve and I, we've financed together over $100 million worth of deals.
Yep.
And I know that you'll appreciate and attest to the fact that every one of those deals was just a slam dunk
piece of cake.
Yeah. Yep. Right. And so 15 years of you and I working together, and then Lindsay now for 7, coming up on 8 years of joining the party. We make quite a team.
Yes.
So Steve has the pleasure working through his lending authority with all kinds of people. But I do think it's safe to say that Lindsay and I are your favorite. Is that?
But that actually is not an exaggeration, because Lindsay makes my life so much easier.
Yes.
Because when I do a transaction with you guys, Lindsay's coordinating everything. Mm-hmm. When I do a transaction with almost anybody else, there's nobody else helping coordinate. So, yes.
Key factor.
Yes.
So back to Amped Funding Advisors, right? So I want to walk through various questions with each of you and just have you give your dialogue. And I know it's a little tricky because we have stories, don't we, between us?
A few.
We have. And we can't use names, but we've learned a lot helping people figure out how to navigate this process that some people think is just impossible. So, Lindsay, why don't we start with you? So one of the perceptions, and I know we've talked about financing quite a bit, but one of the perceptions is that, SBA is the 3-letter, 4-letter word, mm-hmm. right? So can you share why that is and some of the reality around what's true about SBA financing?
Well, really, most of it is that people don't understand the process. They don't understand what they're going to have to go through, what they're going to need to provide, and really just breaking it down and helping them understand, the basics, the building blocks of what we need to gather, and the process that the lender is going to need to go through with the buyer, with our help. And it really is, just something that we do every day. So it's a very simple process for us, but it can be very complicated for someone trying to navigate it themselves.
Yeah, I guess it's like anything. When you know the rules to the road, it's not as bad as the road might appear from a distance. And
correct.
And so, Steve, you get people who contact you different than we do. So in our world, oftentimes we end up with somebody who already knows what they're up to, or they brought us a deal and we're literally just helping get that done. But you get calls from people who might know nothing about SBA. They have trouble spelling it, as an example.
Correct.
So what do you see people come to you with in perceptions about SBA that couldn't be further from the truth?
Yeah, I get that all the time, where they'll call me and say, I've just heard an SBA loan is just a nightmare and blah. They're usually either coming from two places. The only type of lending they understand is they've gotten a home mortgage at one point. And then they've heard some horror story about their cousin who tried to buy a business and it took 6 months and then they didn't get the loan. And the reality is, and I try and let them know this, because I do regular lending as well, conventional lending, I ask for the exact same information on a conventional loan as I do on an SBA loan. And you guys will know, I mean, if we've got a cooperative borrower, typically start to finish, we can do a deal in 45 to 60 days from the day I meet them till the day we close, which is about the same time it does to get a home mortgage. But their perception, they usually have heard horror stories with very few facts.
Yeah. Well, and I think the key thing that you shared there is a lot of people we lean back into what we have experience with. And for some, that would be a home mortgage. And there are also people out there that did get an SBA loan without assistance. And it can be 6 months, 9 months, 12, decline. I mean, it just...
Yeah, and this isn't a commercial for me by any means, but it really does make a difference the lender you're working with. And I mean literally the person that the customer is face-to-face with and how good they are, how much they know, and frankly, if they have any credit authority at all within their own institution, because in many cases they don't. So when they send it into their main office, they don't have a lot of control as to how long it's going to take.
Well, that's a great point. So let's go down that road for a minute, because a lot of people have the perception that SBA is SBA. The loan is the loan. They're all the same. And I know personally that that's not the case, but maybe you both can share, like, what are the differences between you as a lender in your bank and somebody else as a lender in their bank in interpretation of credit criteria and so on and so forth?
Well, what I try and explain to people, and it's kind of the good news and bad news of SBA lending, is it's very subjective. It's not objective like a home mortgage where you either meet certain debt to income requirements or you don't. And if you do these certain things, you're going to get this rate and, so on and so forth. Commercial lending and particularly SBA lending, there's a lot of subjectivity to it, meaning literally the people who are going to be evaluating the credit, they've got their own thought processes, their own biases. So the way the deal is presented to the credit people at the bank makes a huge difference. I don't know how else to say it other than that.
Well, there's so much there. So I want to come back to that. But Lindsay, do you want to give your twist on this between what one lender may like or what? Because Lindsay and I, in our role, we have lots of people that bring us deals that have been declined and then we get them funded. So what do you see there between different lenders?
Well, going back to a 10,000-foot overview, you've got your PLP and your GP. So starting there, which generally speaking, we're going to go with PLP, Steve being one of them. And then knowing, again, like you said, the rules of the road. So we know exactly what they're looking for. We have it prepared long before it ever hits Steve's desk or email. So just ensuring that we are as prepared as possible, which I think I've ground that point home many a times. Yeah. Being as prepared as possible. And again, we know the rules of the road. So ensuring that every T is crossed and I is dotted before it even gets to Steve.
Yeah, well, honestly, we could almost do a whole episode on this. But prior to meeting Steve and working with him, I worked with a lender for years. I mean, and they did pretty much everything I brought them because they made sense and they were fine with that. And then all of a sudden, I got a decline. And then I got another decline. And it's probably around the time I met Steve, that's when I started like, okay, I need to work with another lender. And they were getting approved. And it wasn't that this idea that the SBA is the SBA and the loan criteria is the loan criteria. Every bank has their appetite for what they're interested in. And this particular lender's appetite was cash flowing business acquisitions, which is what I deal with most of the time. And then they something changed. And all of a sudden, decline. And yet another lender who is a cash flow business acquisition lender likes that deal. And so super important point here for somebody in the audience who's looking at trying to find financing for a business acquisition is that they are not all the same and they do not all follow the same rules. And it just because you get a decline with one does not mean that it's going to be a decline with another.
Absolutely.
Yep.
I'm thinking about, and we would have worked on this deal together, but we've had several where people bring us a deal that is declined. And in my opinion, part of that is just literally we were able to tell the story better than the individual knew how to on their own and go with a lender who actually had an appetite for what we had to offer. And do you remember an example of one of those without using names? There have been several. You pick any one, but...
Sure. So, in particular, the one that I think we're discussing is a gentleman who had been approved by a GP lender, went down the road several months and then was declined shortly before we thought we were closing. And really a part of that was the way that it was presented and the lender giving him wrong information the entire time. So because we were skeptical on that, we had documented and ran side by side with his current lender, so that as soon as we did get a declination from their lender, we were able to move forward and hand it off actually to Steve.
Well, and part of what's so powerful about that conversation is that this person was approved, approved verbally, approved with an email, and we were 6 months in, and then gets declined. And again, back to the point that relationships matter and understanding who's behind that conversation. I don't believe that loan processor had ill intent. But oh my gosh. I mean, here we had a transaction with a seller who had poor health. I mean, there's a lot going on. 6 months is a long time. And to your point, fortunately, we were able to have a backup package teed up and then brought it to Steve. And so, Steve, maybe you can share the difference between PLP and GP and speculate a little bit what might have happened in that situation because they were not PLP.
Right. So PLP just simply means you're a preferred lender, which means when that bank, they've been given authority by the SBA to, in essence, underwrite, package, close, do the whole thing on a transaction. The SBA never sees it. They just trust that you've done it correctly. A GP lender, underwrites the loan, they approve the loan, they do everything internally, then they send it to the SBA, where the SBA is going to, quote, underwrite it again. The good news about that is they're not generally underwriting for credit quality. They're underwriting just to make sure all the T's were crossed and that it's eligible. But I've got plenty of horror stories of deals going to GP. Once they go to the SBA, you're dealing with government employees, and it's all bets are off. To the point you're talking about on that particular transaction, and I would caution on almost any transaction, it really does make a difference who you're dealing with on the front end. Because as you said, whoever was on the front end of that might have had very good intentions. But if they didn't have a lot of authority within their own institution, you read commitment letters, even full-blown commitment letters, there are plenty of outs. They're conditional loan commitments, and they need to be because they'll have conditions for appraisal requirements, environmental requirements, maybe even some other financial cross-checks, conditions. And so, it isn't really fully approved until all those things have taken place. And you can literally, even within a bank, have a change of a chief credit officer. So if it got approved in month 1, 3 months later, there's a different guy looking at it, and he can literally just say, no, I don't like this transaction. So it makes a difference who you're dealing with on the front end. You want to know that they are speaking for their institution if that's who you're relying on for the information.
Quick pause from the episode to thank today's sponsor, Amped Funding Advisors. We only partner with businesses we believe in, so we're grateful for their support. And if you're buying a business and need smart SBA financing or creative deal structuring, their team helps buyers get funded the right way with clarity and confidence. And if you own a business and you want to sponsor What's Your Deal, check the show notes for details on how to apply. Now let's get back to the episode. Well, and it's such an important point because even them speaking for their institution, if they don't have credit authority, which they typically wouldn't,
right,
but even respect or authority within it can all end there.
Well, I'll be even more blunt. So especially in large national banks, the way the credit departments are set up, and people need to understand this, is the credit people, the people on the front end, the credit people consider salesmen.
Yeah.
And in many cases they are. And they don't have a lot of a banking background. They've got a list of items they're supposed to gather, financial statements, tax returns, and they package it up and they send it into credit. Credit, in most cases, doesn't really care what that person on the front end's opinion is. Because they just figure you're a salesman, we're credit, we'll tell you if we're going to do it or not. It's why for 15 of the 27 years I've done this, I have worked for small privately held banks so that my boss is typically the owner of the bank so that my opinion does matter. And again, this isn't a commercial because there's plenty of people who have that kind of setup.
Yeah.
You know, there are benefits sometimes to larger institutions, but not a lot.
Well, and I couldn't agree more. I mean, there's two caveats to that. One is that in that deal, because they were GP, I think I remember correctly now, exactly what happened is exactly what you just said. So the loan was approved at the local level, and then it went to the SBA office and got declined. And that doesn't necessarily mean that's miserable. You and I have worked together when you were at a GP bank, and we still were able to get deals done.
I've never had a deal. I've submitted probably 100 deals GP in my career, never had one declined. But you have to know what you're doing going in when you send it into them.
And we've had some issues with some, but we also were able to navigate them. And that's the difference between the relationship. And I guess to your salesperson conversation, which is not, again, salesperson doesn't mean something negative, but I've also had deals way back in the beginning of my career where the loan gets approved, congratulations, and then they do the bait and switch just before closing. So they're literally just trying to take the deal off the market. And then I don't not end up with the loan that I promised my client or that they, and it just is not, it's dirty pool in my opinion. And
that's why when you hear the term pre-qual, be very careful because there's really no such thing in commercial lending. And I see it all the time and it's becoming more and more prevalent where I have buyers, I get at least 5 a week from somebody who will call me and say, I'm already approved at another bank. And I'll say, really? Do they have your financial info? Well, no, but I told them what I make, and which is not at all how commercial lending works, but it's a marketing gimmick to get a deal off the street, like you said, and to hopefully tie up a buyer as their singular client. And I feel bad for the borrowers, and I try and explain to them because they'll ask me for a pre-qual. And I'll say, look, I don't issue them, but I will give you my professional opinion once I've seen enough information to be able to even form an opinion.
Yeah, that's an excellent point. Well, so let me ask you, when something comes across your desk, is there 1 or 2 or 3 things that just right off the bat, you're like, this is not going to happen? Or this has merit? And I know the back end of that story is that typically the way we work together, we will beat the deal into shape the best we possibly can. And that usually includes discussion with you before we even get close to submitting it because we just want it approved. And so back to the question, what do you see right off the bat that can be just forget about it, we're wasting our time here? Is there any key things?
Well, there's the first thing is with SBA loans in 27 years, I've maybe seen 3 that when they hit my desk, they were slam dunks because it's just the nature of the beast.
They were all 3 mine?
Yeah, they were.
This year.
I think, I think all 3 of us do the same thing in that when I'm looking at a transaction, I'm not looking for the good news of the transaction. That's easy to find. I'm looking for all the negatives. I want to see how liquid is the borrower. Do they have experience that lines up with this type of business? Do they have any additional collateral? Now, they don't have to have all those things to make a deal work. But if they've got a problem in all 3 of those areas, it's probably not going to work. So if they need $100,000 for their down payment and they have $105,000 in the bank, that's probably going to be an issue. We might be able to work around it if they've got some additional collateral, say, and they've got the perfect experience. They're buying a business that they've already managed or something like that. But you're usually going to have to overcome one of those things in almost every transaction. If you have to overcome 2, it gets more difficult. If you have to overcome all 3, usually the conversation I will have with the borrower is, I'll tell them up front early on, do you have friends, relatives, somebody else you can bring into this deal? Because maybe you've got the perfect experience, and we've had a lot of deals like this. They've got everything they need except they don't have money. But they've got the perfect experience, they've got the background, they've got the desire.
It's one of my specialties.
and we've done a lot of deals where you had to step in and find somebody, an equity partner, to make the deal work because they just didn't have enough money.
How about for you, Lindsay? When you see him, because you see him before Steve sees him or any other lender, what jumps out at you is like, you drop your hand in your head in your hands kind of moment?
Well, in addition to what Steve has brought up, certainly if they have a large amount of debt or some sort of financial issue, we want to work through that. No liquidity, that's an issue. And usually those conversations, the equity partner or friends or family, something like that, those conversations come up before it even goes to Steve in a lot of aspects. So typically we're going to look for liquidity and their credit, of course, and transferable experience in that industry. And again, it's one of those things where if they've got one or two, we should be, or I should say two, we should be okay. But if we're missing one of those, we obviously need to work through that long before it makes it to Steve.
Yeah, for sure. He appreciates it when it's long before it shows up to him.
Yes, I do.
So we covered quickly, but this brings me back to the story. And one of the things I know, Lindsay, and my objective when we're working on deals is we want to answer everything possible so that when it gets to an underwriter's desk, and I use this example of an underwriter sitting in a room with no windows and they don't know anything about this business, we've told the story well enough where we're making it easy for them to just say approved. That takes work. That's not fill out an application one night after dinner and you're done, right? So can you both speak a little bit to the parts of the story that are so important for somebody to understand who's trying to make a lending decision?
Yeah, the way I explain it to borrowers is it's a business plan. And I tell them, do not go spend $5,000 and pay somebody to do it because then I'm going to get 42 pages. I just got one the other day, 42 pages long. It was beautiful. It was color. It had really pretty graphs. It had a fabulous mission statement, none of which I cared about. There was like 3 pages that mattered. So I tell people it's a who, what, when, where, how document and why. And I also tell them, and this is usually where they get it, I'll say, what would you want to know if I was asking you for $1 million?
I like
You'd want to know who I am. Why do I think I want to do this? You're leaving your corporate job to do this. Just explain all the stuff you would explain to me over dinner if I was your friend. Hey, here's why I'm buying the widget company. And what that not only does is it clarifies in their mind what they're doing. It clarifies to me and the rest of the bank that's going to see this deal as it goes up the credit food chain that these people have thought this through. It doesn't need to be eloquent. It doesn't need to be terribly well written. That doesn't matter. But it shows the bank they've thought this through and they've kind of checked all the boxes. It also, and this is really important, you were just touching on it, the underwriter, I've gotten to know the borrower by the time we've submitted this. I've probably had hours of conversations with them. But the underwriter and the credit people who see this don't know him from Adam. This puts a face to the file. And when I submit a loan, before I submit the paperwork into our portal, I send the business plan because I've got my own underwriter and I'll send it to him directly and say, read this. Now you know who these people are. Here's all the numbers.
Okay.
Because the numbers that's the easy part.
Okay. Lindsay, what have you seen from a story perspective where either A, we've needed to expand on it to fill in some blanks? Can you shed some light on this?
Well, certainly, as Steve was alluding to, the pieces that don't matter, taking those out, of course. And again, if you're asking someone for $1 million or $500,000 or $2 million, whatever that may be, what you're going to want to know. So exactly what you're going to do in the business, who's going to do what, how you're going to financially make this work with you and your family, what's your history, what's your experience, all of those pieces, putting them in. It's not necessarily a graph that the financials are going to show the black and white of the business and what the business can do.
Well, there's so much here. So one of the things that I appreciate is that when we send in a file, we don't want the underwriter to have to come back with 27 more questions. Or I wouldn't want to if I was an underwriter. So we want to try to answer all of those questions so we make it easy for them to do their job, right? That's what we want. The other part of that, I think, is to be able to demonstrate that the borrower has done their homework, to Steve's point. And one of the ways that honestly I enjoy probably the most is when we're helping people with their projections. The projections tell a story as well. And it's one thing to just put numbers on paper, but if a borrower really does their homework, they're literally looking at every line item And in their assumptions, they're explaining why they are expecting this to happen or not to happen. And for me, if I'm an underwriter, I'm like, okay, they've thought this through. They've done their homework. They know what they're talking about.
And they're going to see that bottom line too. It really puts it into perspective of when everything's paid for and I've paid myself, this is exactly what I'm going to get out of the business, or this is what the business is going to have left for operating capital or whatever future expenses may come up. And that's where the rubber meets the road right there.
It is. Yep. The best story that doesn't make financial sense is not going to get approved, I would assume, Steve.
Correct. And on the projections, one thing I'll add is I always ask borrowers, compare when you're doing your especially your first year projections, which are going to be month by month. That's an SBA requirement. Line up the prior year from the previous owner with all the same line items. And then I explain to them, and I'm not just stroking your egos. I don't have to do that when I'm dealing with your borrowers because you guys have already had these conversations. But when I'm doing business with other people, I have to have these conversations. And I'll say, line it up on the left-hand side, do all the same line items. I said, because what you are trying to show yourself and us, the bank, is how is this business going to look when you're running it versus when they were running it. So any line items, and then it's easy to point out, well, hey, payroll is going down by $30,000 because of whatever reason. You're going to be able to they're going to be able to highlight it. They see it. We see that they've seen it and identified it. What I find with most people who don't have an advisor with them, the light bulb kind of goes off as to why they're doing projections the way I'm asking them to do it.
Well, and it's interesting. I'm thinking as we're talking about this that sometimes the story isn't the final story. We've had deals, and I'm thinking about one recently that I know Steve loved, that the story had to keep getting adjusted. And adjusted is just like, okay, there's weakness in this deal. Doesn't mean that bad people or bad deal or any of that stuff, but there was weakness in the deal. And as we were telling the story, Steve didn't like the story as much, and then we'd and then we'd figure out how to fix the story, right? Like, okay, we need more strength here. Where can we get it from? We need to explain this better. How can we do it? We need the seller to cooperate to some extent because of this dynamic. How do we? And we came up with a story that was approvable and did make financial sense and got approved. Yeah, so I can appreciate people listening to this going, man, that sounds like a whole lot of work. It's not as much work as getting declined and having to start all over again with a new bank.
Correct.
Yeah. So, Steve, on the deals that Lindsay and I don't bring you, because I know our success rate is extremely high, how often are you declining deals, or you don't even submit them? Like, what does that look like?
I personally, again, I've been doing this forever, and it isn't brain surgery. I've had 2 deals declined that I've submitted into credit in the last 15 years. And one of the 2 of those I would have declined myself. But it was good enough, and I told people that I would submit it, so I did. But only 2 that have actually been declined out of Lord knows how many, I don't even know. But I will decline deals at my desk because I don't want to waste their time, my time. So, and when I decline a deal at my desk, I don't just say no. I'll say, I'm not willing to go forward with it, and here's why. Here's how you could potentially strengthen it. It usually involves bringing somebody else into a transaction or something like that. And many times, people don't want to hear no. And if they don't have an advisor with them, they'll say, well, I'm fine. Bill at whatever bank told me he could do it. And I'll say, well, good luck with that. And it usually does not work out. But yeah, so. Yeah.
Well, and I think the difference between what we're talking about, and again, I've worked with lots and lots of lenders over the years, and you're, honestly our secret weapon, frankly, although there's no secret anymore now that we're going public. But the distinction is, what you're talking about, right? I mean,
I've been on credit committees. I had my own bank consulting company for 4 years where I taught banks how to do SBA lending. So, and again, I hate this to sound like I'm patting myself on the back or doing a commercial, but I do have a credit background as well as this side of it. And for most of my career, I've run divisions that I was also doing loans for and had, lenders report to me. I'm too old to want to do that anymore. So I just do my own deals and that's it. But yeah, I've got more of a credit background. But I think more than that, I think I've got more of a common sense background because, again, some of this stuff is just common sense to me. Most lenders on the front end, if they're doing anything at all, they're doing just the math. And they're not paying attention to the story, which it's not a coincidence. We just spent the majority of our time talking about the story. That is the most important part. And lenders who don't understand that, I mean lenders on the front end, the BDO, they're the ones who get deals declined because they'll send it in and the numbers work, but maybe the borrower doesn't have near enough money to pull this off, or they have absolutely no background to buy this kind of business, and they didn't address any of those things. Something else I say that's important in that story, you've touched on it. You want to answer the questions before they get asked. But, again, if I don't have you guys involved, if you don't do that, if borrowers submit a loan to a bank and they haven't kind of checked those boxes, answered all the negative things that could come up, the underwriter might ask the question, or they're going to ask the question, well, what about this? They don't have experience. Psychologically, that makes a difference in a deal. If they've got to come back to the borrower to try and clarify things, and they've got to do that 2 or 3 times, human nature, the credit guy involved in this deal or girl has a personality and they've got a life. And if the deal starts to become a hassle because I've had to ask 14 different questions now, they lose enthusiasm for the deal. Whereas they might have had the same answers to all those questions. If they had them up front, that deal gets approved.
That's a very interesting point because I'm imagining if I was in that situation, or even when I've made decisions about partnerships or things I'm going to be involved with, there becomes the psychological, I'm not sure I love it. Then they got to convince me to love it. As opposed to ideally the package is complete going in, story is clear, it makes financial sense. There's no bias. Yeah. Very powerful.
And time again, if it's put back on someone's desk, it's going to get put lower on that stack.
And one of the reasons I've had almost no loans declined is because the bank or the credit people I work with know that when they get a package from me, there aren't going to be a lot of questions. It's not going to be hard. They also know that I wouldn't have sent it in if I didn't think we should do it. So that makes a difference.
And ultimately, nothing really fits in a box in this industry. So, those reps of all the years that you've been doing it and you've been doing it and the years that I've been doing it, ensuring that you understand the big picture and the many different circumstances and how those all fit because they're not in that box. So understanding that big picture and this happened with this deal 10 years ago, so we should probably steer away from this or change this or approach it in a different fashion certainly helps.
For sure. So Steve, is it true? I haven't been through this before, but is it true that if a lender declines a deal, it's done? It can't be resubmitted or what's that like for somebody if they get formally declined?
Again, it kind of depends on the bank. Larger banks, that usually just means, you're done.
Okay.
Smaller banks or banks that I've worked for, not so much. I mean, if something significantly changes, then I can certainly – I literally just had a deal that was like this where we had kind of had to say no, and then some things changed within a week or two. Well, we'd already underwritten the loan. So in my situation, I'm literally able to pick up the phone and call the chief credit officer and have a conversation and go, hey, here was this change on this. Can we, how do you feel about it now? And she was fine with it. And we said, great. Then I called my underwriter and said, make this adjustment, send it back to her. She's going to, chief credit officer is going to be willing to sign off on it right away. It took a day.
Okay.
We didn't have to start over. We'd already done all the work. We just had to do an amendment to the credit memo and get in. That couldn't happen in a larger bank. It would not happen that way.
Okay.
And I think I've driven that point home multiple times in some of the other podcasts that we've talked, that is one of the advantages of our relationship with you, being able to have that conversation directly with you, not just a random underwriter or not just a random BDO each time, having that relationship and explaining exactly what has happened or what has changed. And it just goes right up the line versus, some of the other banks that we've worked with before where you're working with someone and they don't quite understand and you're just another person and they don't get the big picture.
Yeah. Well, and we've literally gotten transactions done that we would not have gotten done, literally because of the relationship with you and with you within my own bank or banks with multiple banks where it made a difference because it does make a difference, the relationship aspect of it. So when I'm able to go in, and you know the ones I'm talking about, where
I do.
we've said, look, yeah, there's got this deficiency, but we know Matt, and Matt's involved in this deal, and we've done the deal, where we probably would not have done it had there not already been that relationship.
Yeah, so it's not nearly as cut and dry as the perception might be.
Correct.
It's an SBA loan. It just is what it is. End of story. Yeah, the other thing that this reminds me of is that momentum is our friend. And that what that means is when I hear horror stories of the loan took 7 months or 12 months or something, to what you just pointed out, Lindsay, if we create a question for an underwriter because we didn't answer it up front, and the underwriter says, okay, well, I'm waiting on that answer to that question. Now I'm going deep into another file. Getting them back into that deal is not what we want. We want them to finish it.
Yep.
Correct.
That answer is going to be at the bottom of their stack of to-dos for sure.
And then they got to get back. So hopefully part of the message for anybody that's listening is that once you start this process, be prepared and be prepared to finish it, as opposed to, well, we'll just see what happens. It's, I personally take a philosophy that I know Steve loves, that that as long as the buyer and the seller are committed to the deal, I'll figure out how to get it done. And it may look different, but it's just, as long as the people are in the game, it's amazing what can be done. And we've done some amazing deals that most people wouldn't have wanted to spend the time or energy on. But the reality is we've changed people's lives by being able to get them done and help them succeed.
A little bit of creativity and tenacity for sure.
Absolutely. Or a whole lot of tenacity and a little bit of creativity, one or the other.
It's Matt's middle name.
Right. So if somebody's looking at buying a business and they're going to need financing, what is the first things that they should be starting to do? Let's say they're looking at buying a business in the next 12 months. What do they need to be putting in place right now to be ready to apply for a loan? And then I want to add a second part to that question, which is if you can kind of explain that it's not all about the buyer. What they're buying matters in some cases more than the buyer, right? So can you walk us through that?
Well, certainly the first step, in my opinion, would be to reach out to us or someone in our same capacity that can assist you with looking at the big picture, the business, your personal financials, the organization of your personal financials. And, if you're in IT, should you be looking at a construction company? Maybe not. If you're, have $100,000, should you be looking at a $5 million business? Maybe not. So just that first level, that first layer of determining your next steps and coming up with a roadmap would be the first step for sure.
Okay.
Yeah, what she said is exactly right. I mean, it's they need to be realistic and understand what is realistically possible for them. And it's those two things. It's what is your background, so limit your scope of what you're going to look at. I mean, I get buyers who aren't attached to anybody like you who will call me about 6 different businesses over a 6-month period of time, all across the map. Like they have nothing in common with each other. It's just, well, I saw this, it sounded interesting, it's a bowling alley, and, or somebody who wants to buy a hotel and their experience in the hotel industry is they've stayed at one once. That kind of thing. So it literally is reality. Last week, I had a guy who had written an LOI on a deal because he thought he had a pre-qual from another lender, which he technically did. It was an online lender who hadn't seen anything on him, but they spit out a piece of paper at him and said, sure, we're interested in your $1.3 million deal. He had $100,000 to his name, which wasn't even really technically enough for the down payment. And he said, well, he thought he could save like another 10 before it closed. And so his post-closing liquidity is going to be about $1,000, which meant he wasn't being realistic. He needed to scale back and be looking at something that was probably at least 50% less expensive for his first business. So that's really the key, is the reality.
Well, and the part of that I want to speak to is that a lot of the people that I consult with and coach or that come to us, they don't know what reality is because they've never done it before.
Right.
And that's part of where I think some knowledge going in is important. I was recently working with a couple that were looking at buying a $5 million business. And again, same scenario. They had about $100,000. I mean, that was not it's not going to work. Now, we could have figured out partnerships or other. I mean, there might have been a way to do it, but the point is they were shopping for something that really was a huge long shot, and also all the chips in the table. I mean, they were not in a position to make that significant of an investment from a sophistication standpoint. And I don't mean that negatively. I just mean it's just real.
Well, one of our deals that we closed not too long ago, same thing. He came to us and he was looking at $1 million businesses. He ended up buying one, I think, in about the $400,000 range because that was what was realistic. That was in his same town. He didn't have to move his family. It was in an industry that he was familiar with, and he had enough money to have his injection funds and some post-closing liquidity, working capital, that sort of thing, so that he could be set up for success rather than starting at, going downstream.
Yeah, and that's the huge piece. And so let's talk for a second, and then we'll wrap up because we're running short on time. But let's talk for a second about the business, because it's not like going in for a home. Can you afford it or not? The asset you're buying matters. So can you touch on that for a minute?
Well, I keep going back to this. The reason pre-quals are meaningless in commercial lending is because 60 to 75% of what we're underwriting is the business you're buying. You can be Rockefeller, and if the business doesn't work on paper, we can't lend you money on it. It has to cash flow. So, yeah, that's critical. And again, a lot of people don't understand that. I have people come to me where they've got plenty of money, and they find a business that, doesn't work on paper, but they really want it. And they'll say, but I can afford it. Again, it's not like getting a car loan or a home loan. If the business can't support the debt, the bank doesn't even have the ability to make the judgment call that they can make that loan. So, yeah, the business there, it's got to make sense. And, without getting into all the ad backs and things like that, but that's important. And that I run into that a lot on transactions from other brokers who maybe aren't as sophisticated, and they will literally list a business that on paper doesn't work, and it's not going to work. And then they bring me an SBA buyer, and I'm like, it doesn't matter who your buyer is. The business is extremely important.
Yeah, that's such a key. I want to repeat that for a minute. But if the business doesn't pencil, the deal can't happen regardless of how strong the buyer is. You can't approve it. I mean, that's unlike almost anything else people would go for financing on. It's for a buyer, hopefully that changes the focus. I mean, granted, they have to have their ducks in a row, but what they're buying has to work. Yeah, the financial feasibility has to be there.
It's like buying a house without a roof, know.
Well, and what I tell buyers all the time is there's times I'll look at a deal for a buyer and I'll say, I don't think this is going to work. And they'll get upset with me because they have tunnel vision. They want that business. And what I try and explain to them is, I'm on your side.
It's a great point.
We have the same objectives. Anything I have a problem with, you should at least want to double check what Steve has a problem with. Because if I have a problem with it, you should have a problem with it, and vice versa.
Yeah.
So in fact, I always tell them we're kind of a second set of eyes for you. If we get down the underwriting road and there's an issue on this business, we want to make loans. I mean, that's what we're in the business of doing. So we're not trying to find negatives. We're just, if there is a negative, we're going to bring it up. Yeah.
That's great input. Lindsay, how about from your end, seeing where a buyer might have all the great intentions in the world, but the business, I mean, I know we don't see that often, but can you add some more color to where the business matters?
Well, certainly. And there are some circumstances. I don't want to say that there's never a circumstance, but there are some circumstances where it may not appear to work. And again, that tenacity and creativity, where we can get to the other side of it if there's a reason why it's not working currently. But back to your point, making sure that the business can sustain itself, not just for 3 months or 6 months, but long term. And there's a lot of times where, someone may be leaving their $200,000 a year corporate job, and they think that they can buy a business that's going to have, $100,000 in cash flow, and if that's not going to support them personally, then certainly having those conversations long before it ever gets submitted, is this something that will work for you and your family? And a lot of times they don't even realize that that's what that looks like.
Yeah. Again, back to most of the people that we're working with have never done it before. And so if, in my mind, it's important for us to educate them so they understand what they're getting into and can play the game and win, as opposed to just play the game and
Well, rush through it and get what they think they want, and then they get it, and they're highly disappointed and end up bankrupt.
Well, and that's the worst case scenario, right? Somebody ends up working their way through the process one way or the other without really knowing what they were up to, and then it just becomes a financial catastrophe, which is not good for anybody.
Well, and we want it to work, just like Steve wants it to work, as he was alluding to as well.
For sure. So, Steve, I finish my podcast. I'm not going to ask Lindsay to do it this time because she's tired of me asking her to do it. But I finish my podcast with, it always is important to me to go back to the roots, right? And how people got where they are. And so most of us, all of us I've ever talked to, have had somebody who gave us a hand when we needed it or believed in us when we didn't believe in ourselves. You've had such an extraordinary career. Is there somebody in your life going way back that kind of helped you out when you needed a hand or believed in you?
Well, I've had lots of those, including the first guy who ever hired me when I was one of those guys that could barely spell SBA. I wasn't even quite sure what the job was I was applying for. Literally, that's not an exaggeration. And he met me, and he was just a super nice guy, and he ran a division for an SBA lender, and he gave me a piece of paper and said, here's what you need to ask for, and go do it. And there was that. But more than that, going all the way back to my father, he was a banker for 100 years in Phoenix. And I remember as a little kid, I have no idea why I asked him this question, but it stuck with me. And I asked him, how do you decide who you're going to give money to? Because in my mind, he was just handing out money.
Right.
And he told me, I'll never forget this. He said, it literally depends on what I think about the people across the desk, like discernment. And he said, because I can look at a deal and all the numbers make sense, but I'm looking at the person across the desk and I just think, yeah, if things get tough, they're going to be out of here. And conversely, if the deal doesn't make perfect sense, it kind of makes sense, but there's some gray areas, but I really trust the person sitting across from me, I'm going to loan them the money. So it basically came down to character.
Yeah.
And that always stuck with me. And I can usually tell within 2 or 3 minutes of talking to somebody on the phone, a buyer, whether or not this is somebody I'm going to want to lend money to. Because if they're, and it's true, if they're earnest and they're pleasant and, even if they don't know what they're doing, those are the people that are fun to help. So that always stuck with me from my father.
Well, I appreciate that. What's funny about that is I've never heard that story before, but I have heard you say many, many times, I know they're going to pay us.
Yeah.
We just got to figure out how to make it make sense on paper. And so it goes right back to that.
That's absolutely true. Yeah. And now you say that, I do say that a lot. They're going to pay us back. We just have to prove it.
Well, and it's funny when you say it, I like it because I feel the same way. It's like, it's part of our job, but the character is there.
Yeah.
Right? The character behind the character. Well, this is such a great conversation, and especially for people who aspire to take life into their business matters into their own hands and go out and get a loan and buy a business. And so how is it best for people to find you, Steve? And then Lindsay, I'll ask you the same.
With me, it would just be my phone number, which call me anytime. It's 480-363-6174. And my email address is just sjohnston with a T at mwregionalbank.com.
Very good. And Lindsay?
Sure. We can be reached at Amped Funding Advisors. So our website is actually Amped Success. And then our 1-800 number is 1-800-569-8974.
Very good. Well, thank you both for joining us. I really appreciate it. And the knowledge that's at this table is, again, for pretty much unheard of to be able to capture in one room. So thank you both for joining us.
Thank you.
You're welcome. Yeah. Thank you.
Well, I hope you've enjoyed this episode. If you are in a position of trying to obtain financing for a business, of course, they can assist you with it. But listen to this again. The detail that is here can save you months and a whole lot of money of trying to figure it out on your own. There's a pathway here that's well paved, and it's available. We'll see you on the next episode. And that's a wrap on today's episode. We hope you enjoyed the conversation and got some valuable insights into the world of buying and selling businesses. Want to be a guest on our show? If you have a deal that you'd like to discuss with us or a business story to share, we'd love to hear from you. Shoot us an email using the contact information below in the episode notes, and let's make this happen. Never miss an episode. Make sure you subscribe on Apple Podcasts, Spotify, or wherever you listen. And if you found today's episode helpful, please leave us a review. It helps more people like you find the show.